This is E14-23, and basically we're going to be trying to use our understanding of balance sheet and cash transactions to figure out what cash transactions took place just using a balance sheet for 2 years of a business. So, or rather the balance sheet and the income statement. So let's look at this first one. So it looks like it's asking us to calculate the acquisition of plant assets in a year based on what happened in the balance sheet. So if we open the balance sheet up, we see that we had some activity happen in the plant asset account, and it's telling us that the cost and accumulated depreciation of a disposed asset was $43,500. So let's kind of see how this works out. So let's just set up a little T account. So this is plant asset. So our beginning balance is going to be a debit balance of $217,200. This is the beginning balance. And it's telling us that we also disposed of some asset that had a cost and accumulated depreciation of $43,500. So it was basically bought for $43,500 and it was fully depreciated. So we won't get into the accumulated depreciation account because it's not really going to be used. But we did, at the time of disposal, have to credit plant assets by $43,500 to dispose of this asset. So this was a disposal. And then we know our ending balance is $68,700. So end balance $268,700. So then we have some acquisition, and it's X. So we basically have to solve for this X. This is what this question is asking us to do. So we can basically take our beginning balance minus this disposal plus X equals this ending balance. So if we can rearrange the terms and solve for X, we basically have ending balance minus beginning balance. So this would give us the number for X if we didn't have the disposal. But since we have the disposal, we have to add in that amount because this X has to, in addition, go from the beginning balance to ending balance and also make up for this credit. So if we do this, then we see that we get a value for X of 95,000. So let's see if that works. If we plugged in 95,000 here, how would we calculate this? We'd start with our beginning balance plus this 95,000 minus our disposal. And yes, we do see that it works. So that must mean we spent $95,000 in cash to buy this asset. Okay. Okay, so now we are borrowing with long-term note, and we only have one long-term note transaction that happened. Okay, so we only have one transaction in the year, so it's going to be a similar kind of thing. So let's just kind of repurpose this T count. So now we're looking at long-term notes. So again, we have a beginning balance, 65,000, and then an ending balance of 59,000. And so we're told that there's only one transaction that happened in the year. So it must have been some kind of debit, meaning a payment on this note payable. And so if we just take the difference, say transaction. So it's a payment. Some payment happened on this long-term note of $6,000. So we have a payment of long-term notes payable is $6,000. Okay. Next, compute the issuance of common stock, and we only had one common stock transaction. So again, this is a very similar transaction, or sorry, calculation. So now we're going to look at common stock. So we see here we have an ending balance of 42,000 and a beginning balance of 35,000. So that means that there was some issuance, right? Because we're going to need a credit on this side to get from 35 to 42. So the difference is a issuance of 7,000. Okay. And then there is a cash dividend that was paid. So basically, how are we going to look at this? We have to basically look at retained earnings, what happened. So we have our statement of retained earnings. Let's just kind of use that as a blueprint. We have beginning balance, we have net income is added, or loss is subtracted, and then we have dividends, and then we have ending balance. So we know quite a few of these. So we looked at retained earnings on our balance sheet. Our ending balance is 303. Our beginning balance is here at 233. And then let's look at our income statement here. We have a net income of 102,000. Okay, so now we want to solve for this x. So how do we do that? We take our ending balance, we'll subtract our beginning balance, or how about we do it like this? We get a subtotal here. So in order to get from this 335 to 303, we are going to have a negative number here. So it looks like we have $32,000 in dividends because we take our beginning balance, add net income, and then we need to subtract this amount to get to our ending balance. So the dividends paid, it looks like it's 33,000. Sorry, 32,000. Okay, that's it.